China Services PMI out today, edging up slightly from the month previously. Looking at this data and more coming out of China, I'm joined by economist with GFC Economics, Guillaume Derrien. Welcome, Guillaume. So the China Services PMI picked up to 52 last month from January's 51.8, a small amount of growth, but we're still hovering just over that 50-point mark. What do you make of this result?
Look, I think the weakness of the overall PMI is probably a sign that economic growth in China has been slowing maybe perhaps quicker than expected as a result of probably the impact of the housing market kind of spreading through across the wider economies. But overall, I mean, the fact that the services PMI is holding up a bit better than the manufacturing is another sign that Chinese economy is moving gradually away from housing and low-end manufacturing toward services and higher technology sector. I mean, you have a lot of companies like Tencent, the website company like Xiaomi, the phone maker, which are doing very well. It's like kind of like symbolizing the new growth pillar in China. And at the same time, you have investment in research and development spending, which is trending higher. So really, the fact that the PMI are pretty weak is a reflection of the economy is doing probably greater than expected. But overall, the services sector is doing relatively well in China. That's the key, really, for the transition in this country in the longer term.
China's economic growth slowed to 7.3% in 2014. Now, as new orders rise at their quickest pace in 3 months, should we see a pickup this year?
In terms of headline economic growth, I don't think I would be surprised to see any pickup in growth. And overall, I think growth might well slow toward 6% by the end of the year. The government might revise their growth target towards 7%. The GDP data might reach 7%, but overall, if you look at maybe more reliable indicator like electricity consumption, that has been slowing for quite a while. And overall, I think growth maybe at the end of the year might be more toward around 6% rather than 7.5%. But of course, the issue in China is not headline growth per se, is really rather than quantity, is really quality of growth. And the fact that this transition away from housing, low manufacturing to services, that's going to be the key really, because that's where employment growth and is going to come from. So really, what you want to see is growth slowing, but actually the type of investment we're seeing is much more qualitative than in the past. I think that's really the key here. It's not the growth, but really like which kind of investment in terms of new growing sector, which would be key really to look at.
So of course, late on Saturday, we saw the People's Bank of China cut interest rates, its third major easing since late November. With growing deflationary pressures, should we see further cuts? How has the yuan been reacting?
I think we'll probably see another round of rate cut in the coming month. And actually, the fact that inflation, as you mentioned, is very low, allow the PBOC, the People's Bank of China, to cut interest rate more aggressively. Actually, the risk here is the fact that they're too slow in cutting interest rate and they don't secure meaningful reversal and turnaround in the housing market. And I think that the example really, the parallel with Japan is quite interesting. Well, actually, in the 1990s, the Japanese authorities have been too reluctant in cutting interest rates. They didn't secure this turnaround in the housing market. So really what we'd like to see is probably really the Chinese central bank be on the top of it and reacting as quickly as possible if the housing market shows sign of nothing as a turnaround. And one point which is important is the concern about financial stability. The cut interest rate, to my sense, is a non-problem because in China, the government, the authority have the hand on the banking sector. So really they are able to drive and to force banks to lend in productive sector of the economy, which will not be a risk for financial stability. So really, I think that we should see probably another round of rate cut in the coming month, and probably going to react quickly enough. And in terms of the yuan, I mean, the yuan has been weakening. The RMB has been weakening on the back of it. It might continue to weaken a bit in the coming months as a result of some outflow from foreign investors. But overall, I think the trend in the longer term is for the yuan to strengthen, given the strength of the current account surplus and the trade surplus overall.
Guillaume Derrien with me there. That's all from me for now. Thanks for tuning in and remember to keep clicking back to Dukascopy TV.